Hey, what's happening, guys? Dan Darrow here with another Options and Play video update. So, today's video is going to talk about tech because tech is the focus of this week. Uh, Today and yesterday, it's been an industrial show. So, most of like the heavyweight names were industrials. But starting tomorrow and then lasting through Friday, and really for the most part next week as well, it's going to be tech and just more tech. You have nearly all the heavyweights coming up in a 2 week stretch now. So it's a really good time to kind of go over the state of tech. And uh, we're at an interesting crossroads, that's for sure. So, the long story short, right? $1 million question here is this time different, or is this just another buy the dip opportunity? Everybody wants to know. I mean, that's what you hear about talked in the it's what you hear about everybody talking in the news, every article you read. Everybody's got an opinion, and I mean, obviously, there's been no debate, right? Like for the last few years, buy the dippers have been right. I mean, they're unquestionable. I mean, it's you can see the action, and I mean, this is the XLK, so this is the tech ETF. I mean, this has been the definition of buy the dip. If you look it up in the dictionary, you see buy the dip, it's going to be a picture of this. So, um, there's been a lot of doomsday people out there every time we get a little pullback, and up until this point, they've been wrong. Buy the dippers have won out over and over and over and over again. Uh, but we're at a really critical point technically. Uh, And today we got the double tap of the recent low, so you can see like the XLK drop down to retest the recent low. But if you go back and look at the spiders on the daily chart, you can see that we just got down to retest the recent low. Qs just dropped down to get very near the recent low. So not only are the averages retesting lows from a couple weeks ago, uh, but it basically lines up almost perfectly with just the real meat of earnings season with the heavyweight names coming up. And I'm not going to make a call on whether this is the bottom or the top, but what I'm going to say is that this time is starting to be different, and I can say that unquestionably that this time is starting to be different. Uh, this week is going to be very dependent on tech names because you have Microsoft, you have Intel, you have Amazon, you have Google. So as goes those names, so goes tech, so goes Nasdaq. And well, here's why this week is going to be so important, right? So you can see very clearly on this chart that this is the weekly chart. Since the election back in 2016, we have basically spent only a very short period of time underneath the 20-day, right? You can see most dips for a while didn't even reach the 20-day, the 20-week, excuse me. They only got down to the 8-week and we'd bounce. I mean, back in February when we had our first real pullback in a long while, we did chop around underneath the 20, but it ended up holding. We would reverse above it. Now you can see we are materially below 20-week, right? And we've tested the 50-week for the first time basically since, I mean, even before the election. Going back, this is July of 2016. You can see that's literally the last time we tested the 50-week moving average on tech. So like I said, I'm not saying whether this is the bottom or they're not saying like was it the bottom of the move or maybe like top of a long-term pullback, but what I'm saying is like this is different, right? Like the really aggressive uptrend in tech is showing signs of breaking. I mean, you can see it. I mean, we haven't tested the 50-week since mid 2016. So just that fact alone is telling you that something's different this time around, right? And that doesn't necessarily preclude like a bounce and like a rip higher, but it is something to take note of because it shows that maybe the characteristics of this market are starting to change a little bit. You know, what had been just a really aggressive, you know, trend, buy every single dip possible in tech, maybe we're getting to the point of exhaustion in that, right? I mean, some of this is due to the semis, right? I mean, like in terms within tech land, I mean, they've been showing some signs of weakness, and for a few months now. So you know, you can't pinpoint some of this blame on semis, but there are other really big names. I mean, when you look at these weekly charts, there's other big names that are starting to show some signs of breaking their trends as well, right? Might not be aware, so I'll pull up Amazon here. Look at this chart of Amazon, right? It's one of the big names this week. Priced in about 125 points. What's different this time around? I mean, you can see it. It's clear, right? It hasn't spent really any material amount of time underneath this 20 week since basically when it was below $1,000. So it's doubled, and that was the last time it really spent any amount of time underneath it. I mean, it did tick below it, but it didn't really stay below it. I mean, now it's pretty comfortably below the 20-week moving average, which is up above 1850. I mean, it's 100 points underneath. So earnings, you know, the 125 points would basically just pop to get back above that. But you can see, like the trend was just, I mean, for a while it never even broke the 8 weekly, and now it's hanging out underneath the 20, which is a definitive sign that this time, yes, it's a little bit different. I mean, this is a sharper pullback, and like the really aggressive uptrend, it might be pausing a bit. So that's, you know, one sign why this week is just so critical. I mean, you have some of these big names that are underneath trend support at the moment. It's not alone, right? Google. Oops, let me get rid of these. So Google, what's up with this one, right? Going back to mid 2016, this 50 week, right? Held here perfectly. And now what's happening? Now it's hanging out underneath the 50 week. Basically every dip was very quick. It hit it and it snapped off it. Hit it, snapped off it. Hit it, snapped off it. And now it's going into potentially its third week in a row below this moving average. I mean, you can see underneath, I mean, like the next obvious level is down in like the 1,000 range. I mean, then you get to test the 100 week. But just that fact alone, I mean, basically over 2 years, it hasn't spent this amount of time underneath its 50-week moving average. This one's priced in 60. So this one is closer to the 50, right? So a 60-point move would get back above it. But it just shows, you know, another reason why it's such a critical week. I mean, another big name at the bottom or even underneath, like really important trend support. Microsoft. Next to Apple, might be like the strongest of the group, right? But again, you know, highlighting why this week is so important. Look, I mean, this is just so impressive. Just since the end of 2016, it basically has spent maybe what, like 1 day underneath this moving average. You know, like back in when we had like that pull in February, it didn't close below, and then later in March it dropped, but basically reclaimed it like immediately after. But you can just see, I mean, this thing has been the definition of strength. The 8 EMA has just been aggressive. Every single dip, bought, everything, and now it's kind of like pushing back down into the trend. So you can see, I mean, compared to some of those other names, that it's still within the trend, and that's why, you know, this one and Apple are still in like those really aggressive trends. But you know, Microsoft's pricing in 5.5 points. So if it doesn't go well, I mean, then you're gonna see probably a move below this trend, and it could open up a really much more substantial retracement down below 100. I mean, like the way these things work, it seems like when they finally break, you're gonna get like a move into like the next critical weekly moving average, and that's below 100 at this point. You can see down here. NOW, a name, maybe not a household name, but it's been like just a fantastic performing software stock. One of like the top names, you know, along with like Salesforce, Adobe. This one has just been fantastic. And I mean, I could pull up like charts of other names in this sector, and I mean they'd be very similar. It's trading below its 20. I mean, this stock has really spent no significant amount of time below this moving average. It's just been incredibly resilient when it gets down. Like snap off it, snap off it, snap off it, got down, snapped off it, snapped off it again and again and again, and now it's working on its third, almost fourth week below it. So it doesn't take a rocket scientist to see the patterns here, and I just wanted to bring these up to show you why this week is going to be so huge. Yes, there are a ton of names reporting, so yes, it's going to be really, really busy, but also super important is the price action, because it's going to dictate whether the bounce, can kind of reset some of these things and get tech back in the ball game, or whether a long-term trend in tech is finally nearing its end, and we get an actual deep retracement, which we haven't seen in a very, very, very long time. So with that being said, expect a lot of earnings trades coming your way. With all of like these critical reports means you're gonna get a lot of action. So a lot of action means a lot's going on, and like, that's what we love, options in play. So a lot of trades coming down the pipeline. So I hope you guys have a great night. Rest up, relax, get ready, because the next 2 days, 2 weeks are just going to be jam-packed, and there's going to be a ton of stuff going on. So I will talk to you guys all tomorrow. Have a good one.